Good morning. This is the weekend update for Buy Sell Short for Saturday, February 2nd. Starting off with the Dow 15-minute chart. And when we went over this chart on Thursday, we mentioned how we had this really steep 50-point decline. But given the slow and steady advance we've seen over the last month, it looked pretty big on the 15-minute chart. But as you can see, that 200-day moving average in the 15-minute time frame held perfectly. Reason for the big bounce, jobless report came in, 150 odd thousand job gains, the same anemic, barely growing job growth that we've been seeing over the last several months, and big spike in the market on it. Why is that? Well, it's good enough to keep corporate earnings slowly moving higher, and more importantly, it's bad enough but good enough to keep the Fed still pumping liquidity into the market, and that's really all the stock market cares about right now. And off to the races we went, at least in the large caps. As I've mentioned many times before, we as small cap traders and momentum traders really don't want to see big up days like we saw on Friday, because 9 out of 10 times they are boring as heck. It's all large cap focus. All the money moves to large caps. Most of the gains are seen in that initial first hour or so spike, and then it's dead for the rest of the day. And for that, I prefer slightly down or slightly up red days where we actually see more action in small caps. But pretty boring Friday, but it was a fantastic week, and it's hard to complain about that. If we look at the daily chart, you can see we broke above that 14K level, and that, of course, gave the business media lots to write about since Friday. First time over 14K since 2007. Looking at the 10-year chart, you can see that all-time high back in 2007 is but another 1 or 2 days away if we continue this uptrend, 14,198. And we're entering the month of February. We don't have to worry about the debt ceiling crap for at least another month before they start rattling their sabers. So, the risk that we had thought would be there is gone, and the market is just pushing up, and earnings season so far has not crimped the market. We have been seeing some misses like Apple, but the market ignoring them, and some nice wins, which has helped the market slowly move higher. One thing, though, that I am keeping an eye out for, and you should too as well, it's been a while since we heard some crap from Europe. And, over the last 3 years, usually when we go 3, 4, 5 months without any serious European news, some sort of nonsense is brought up. So that is one thing to keep an eye on out there, as a possible attack they may use on the market. It's been a while since we've seen that. Russell continued its nice little move higher, and this, as I said, should be the year of the small caps market. We are all-time highs in this Russell small cap index. As I've said, this is like the large cap of small caps, and we still have many small cap stocks trading at or close to multi-year all-time lows. So we've got a lot of upside potential in the small caps. Now, I wanted to make a quick mention on the cubes, QQQ. Been some talk about negative divergence in this compared to the other indices in the market, and I just wanted to mention, this actually looks like it's trying to break out, but keep in mind that Apple is a large component of this, and a large reason it's been having so much difficulty. So a lot of these things in ETFs that are coupled to Apple, you sort of got to ignore it, because really, when you think about it, the market has done fantastic given the sell-off in Apple. When this market used to be tied, almost stapled to the price moves in the market. Wherever Apple went, the market went, and this decoupling is a good thing, in my opinion. Anyway, let's jump into some stock plays. API, steep low-volume sell-off on Friday. We were at 83 cents on Wednesday. We got a dip down on Thursday, and they pulled the rug out on Friday, but we recovered nicely. Nice little cross bottom here. Let's see if we can make it bounce back up to that 83-cent level this week. ASTM, we have been extremely patient on this stock. Stem cell stocks have been doing very, very well. This can be a very frustrating stock to trade, but we've been very patiently sitting in this stock. There's not been a lot of chatter out there in social media, which is fantastic because every time those clowns talk about this stock, it gets hit. Slow recovery. We are almost at another little break here. 140 is what I would be looking to add to my position on this one with a 135 stop for a move to 155 to 160. We've got RSI peaking up above 50, a positive MACD cross, which is good, and the next thing we're going to be looking for that'll be key is a downtrend break of stochastics. We're getting right up there. Might take another day or two. You know, a positive press release from these guys would light this baby up. But I think we are setting the stage for a nice recovery over the next couple of weeks. Quick mention on CBLI. You know, it looks great. Strong buying, large bids, pretty much every day this week. And then going into the close, we get some low volume, paint the tape lower trade. 164 is where this one will light up. And I think we could definitely see a 2+ move on this one. 200-day moving average. 164 to 168 is the traffic zone. Breaks through that traffic and up we go. RSI looks good. Stochastics up through the 50 level. Let's see if this is the week that this one finally goes. CRME. Nice pop on this one Friday. Got right up to that strong resistance level that is at 53 cents before we retraced yet again. This one is locked for a big move, and I think this could finally be the week that we see this one light up. If we get any sort of positive press on this one, you know, I could still see us getting 50% upside from this level. If we look at the near-term chart, we saw a positive MACD cross, and check the volume spike on this one over the last couple of days. The last time we got volume spikes like this, the stock doubled. We are coiled right here and looking ready for a little double, and if we double based off that move off 40 cents, that gives us our 80-cent target here. So looking very, very nice going into this week. DRRX. Now, you recall in the last couple of videos, I've talked about how a lot of stocks in early January ran up, and then we saw a few days consolidation to the downside, and many, many times we've been seeing these stocks bust through that previous resistance and go to new highs. 115, you know, this chart pattern has that pattern. 115 is the break we're looking for this week. 130 plus is the target, so keep a very close eye on this one. It's also on the pop scan for Monday, so let's see if Monday is the go day for this one. Penny stocks, stocks under 50 cents, starting to get some very, very nice moves on these ones. This CPHI looks like it's trying to go 30 cents, could give a nice little pop on this one, so keep a very, very close eye on this one. Would be adding 26, 27 cents here as we wait for it to go. RNN, just like ASTM, this is another biotech stock that we have been extremely patient on. We've got this little quasi cup and handle formation here. 35 cents is the break. 200-day moving average still remains our target up there at 42 cents. Over the last 3 days, very, very big volume on this stock in a 1 cent trading range. And what this probably is, in my opinion, is that financing that happened back in early December. This is the tail end of it. Once we, this volume is really, really good. We're eating through those shares, and we could see a very, very nice upside spike in it. It may come on news. It may come because these guys are ready to let the stock run, just like we saw in KIPS, just to give you an example of it's similar kind of action that we're seeing here on RNN over the last few days. Remember this one? We sat in it for about a week or so. It just kept trying to pop. The financiers from here kept a lid on it, and then boom, over the course of 3 days, it went up 50%. So I'm thinking we are going to see a similar thing happen on RNN. It's just a matter of when, not if, in my opinion. SCON, little tech play. We're looking for a break through the 50-day moving average at 31 cents. Target 40 cents plus. If we get some news on that HTS wire development, the 200-day moving average could be seen very, very quickly. And again, these stocks under 50 cents have been blowing up. And as you can see on the chart, we're about to get a positive MACD cross. Stochastics have already broken up through 20s. RSI is looking to break 50. So the indicators we like to look for a bounce in bottom stocks are in this chart right now. So let's see if this week is the time. SYNM looked really, really good. It looked like we were about to break that flag on Friday. We got as high as 51 cents, and then boom, it was at 46 cents on a 200K block sell. Now, you recall we've talked about how over the last month, every time the stock is ready to go, a foot comes in and holds it down. And a lot of manipulation on this stock, but I think there is extreme value here, and we are very, very close to a breakout. Now, this past week, the EPA has mandated 16 billion in biofuels, ethanol, etc., be used in the upcoming year. And within that, they've required 2.7 billion of biodiesel. This is what these guys do. We're also waiting for news of the Department of Defense awarding a $150 million grant. SYNM is a strong candidate for getting a chunk of that. Biofuels are doing very, very well. Oil is at an all-time, or not all-time high, but pushing that $100 mark. 200-day moving average at 65 cents is still our target here. Flag break we saw on Friday, except for that paint job. Next ad place on it is a break through 54 cents. So this one looks and should go big this week. The other biofuel stocks have been on fire, like BIOF has been doing very, very well. PEIX, nice little pop as well this week. SYNM is lagging now. A new one we jumped into on Friday, VRNM. Low volume play, but these guys used to be the leaders of this sector. And if you go back and look at a multi-year chart, this one was way, way higher. Stock got punished last year on the weakness in the ethanol stocks as the ethanol companies pulled back on production. And the reason these guys got hit so much is they provide the ingredient to actually make ethanol. So an increased production of ethanol is very, very beneficial to these guys. Next target on this one is 282, and the 200-day moving average up there at 318 is calling. RSI broke up through 50 on Friday. Stochastics in the basement, and this is a low volume play, but this stock, if you look at past moves, as you can see here, when this stock starts to go, it can go big. It can go 50 to 100%. As you can see, this stock chart has many, many big spikes in it, and I believe another power spike is about to come, and 282 is probably going to light this one up. So keep a really close eye on it this upcoming week, especially with the strength we are seeing in these biofuel stocks. Last but not least, got to go over WYY. This is our swing/core position play. Very, very nice move getting ready here. Over the last 2 days, there's been strong buying on the open that's almost broken that 50 level. Then we see a little retrace. It trades on the Amex, so what we're seeing here is the specialist filling orders of the buyers and then pulling the bid so that he can buy inventory to sell to them again the next day. 53 cents is the 200-day moving average, is the big breakout level that we are watching for. And as I mentioned, these guys are profitable. They're in a lot of very, very profitable sectors right now, especially cybersecurity. Woefully undervalued here and could be a very, very nice mover for us over the next month into the earnings report. Just similar to what we saw in Zone, ZHNE, which popped 50% over into its earnings report last week, over the month of January. So what we're seeing happen in a lot of stocks, and, let me go back to SYNM as an example, just to go over it real quick. What we're seeing happen is stocks pop up to resistance, traders take their 1 or 2 cents, it dips back down, and as I've been saying over the last month or so, this has switched into a market a lot like 2009. Swing is where the big gains are made. If you're a patient trader right now and trading swing and core or scalp and swing positions, you can do very, very well, because what happens many times is traders sell this little 1-2 cent pop. Next day, boom, news, it's up 20%, 25%. Yeah, you made your 2 cents, but look at all the coin you left on the table, and that's been happening more and more so, and you're going to see more and more traders start to swing a little bit more as they see all these gains left on the table, and that is to our benefit. So That's it for the video. If you've got any questions, shoot me an email, feedback@buysellshort.com. Have a great weekend, and I will see you guys in the chat room on Monday. Bye.